I'm Nathan Fabian. I'm the Chief Executive of the Investor Group on Climate Change in Australia and New Zealand. And we are a collective group of institutional investors, pension funds and large retail funds, as well as investment banks and asset consultants who are concerned about climate change investment questions. So we look at policy issues and policy and regulatory structures that can help our investment decisions. And we also look at our actual investments, the places we allocate our capital to, and how that's going to shift over the coming years because of climate change risk and opportunity. And what we're really seeing in Australia at the moment, for starters, is an awareness at the institutional investor level that carbon emissions present a risk in our portfolios, and that we can expect some cost impost over time. Whatever mechanism that's going to be, we can see that's a risk we're carrying in our portfolios, and we know that reallocation of funds based on mitigating that risk is going to be necessary at some stage. So we're looking locally at renewable energy investment opportunities, but that is still a nascent market in Australia, a market which is heavily dependent on fossil fuel energy generation. And we are starting to look at structures which would help us invest in emerging economies. Now, we will be reliant on pooled funds, I think to some extent, and on project de-risking by multilateral development agencies who act on behalf of governments, and some of the quick start funding out of Copenhagen should start to pave the way there. But we're investigating how we can start to apply our private capital to emissions abatement, to renewable energy generation and clean tech investment, and in time, but not so much yet, to adaptation questions around climate change. So there is progress being made domestically. We are starting to see climate change figure as a material ESG risk, as we call it, or responsible investment risk that we need to manage, we need to measure, we need to manage, and we need to consider how that affects our asset allocation in future.
I mean, how big is this market, and has Copenhagen put a real dent in it, or the lack of agreement at Copenhagen?
Yes, there's no doubt that Copenhagen would have provided momentum to domestic policy formulation in Australia, and so the lack of that clarity at the international level means we're lacking a little clarity locally as well. And so deals that are waiting for both debt and equity financing are going to be waiting for a few months yet, and possibly a year or a little longer. And so yes, it's fair to say there's been a dent put in momentum around clean tech and renewable energy investment in Australia, and the starting process of this reallocation of funds that we know is so necessary.
Yeah. Now, many people would put the financial industry, investments and so on, at the heart of the problem because of the short-termism of the market. Are we seeing anything that gives us hope that we're moving away from that, or learning how to deal with that?
We're seeing there is reason for hope, but frankly there's not enough hope. Institutional investors need to do their best to be diligent to understand the issues and the risks, and to start to make their own decisions about reallocation. But unless we get the regulatory regimes right, we will not move the capital quickly enough. We know that we're running out of time to address some of these climate questions, and so if we want the mainstream to move, they need to know the rules. Now we say, give us those rules as early as you can and make them loud and long, so that we know where we're going, and we will reallocate investment. But we will only get incremental change until that occurs. Yeah.
And now some of the regulation is about managing emissions globally, and some is about managing the financial industry. So what sort of policies are you looking for in both of those spaces?
Well, Australia is an interesting case because we have a significant pension fund sector that underpins the nation's retirement savings. It's mandatory, unlike other parts of the world. And so there is currently a federal government review into the role of the superannuation industry as an economic actor in its own right. in this sector, and the message has come pretty clear from the government that unless you start to work out how you're going to shape economic development in this country, then we're going to take away some of the rights you have to allocate that capital. So this is sending strong reverberations through the sector, and there's a heightened awareness of long-term investment questions. So ESG and sustainability questions fall firmly into those considerations. On specific issues like climate change and carbon markets and what have you, well, we believe that it makes sense to price carbon, and we believe it makes sense to find least cost abatement globally, and the sooner that countries can get confidence in what they agreed in Copenhagen to the point that we'll regulate domestically, the better.
Okay, and yet my impression at least is that Australia has fallen behind, particularly on the climate agenda. And why would that be? I mean, when you've got a country that's been in drought for 10 years or so, what will it take to get the penny to drop?
I think we're at the stage now where most people understand the financial questions and the economic questions around climate change for the Australian economy, but we are a resource-dependent economy. We rely a lot on exports of minerals for our foreign income, and so there are going to be some losers in the Australian economy, and as we all would expect, they are reluctant to move as quickly as others might hope. And so while some in the investment community would say we don't want to be last to move, we don't even want to be in the middle. We want to be just before the middle. We want to be somewhere in the first half of the field. There are some resource sectors in Australia and some companies who would prefer to be towards the end. And that's the problem we've got, and we should not expect anything other than that from some of those companies, because that's how they make their money. But of course, when you're making policy for the whole economy, and when you invest across the whole economy, you need to move a bit more quickly than that.
So finally then, what is your view of how this is going to pan out over the next 10, 20 years? What sort of scale of change are we looking at?
Well, I think if we're talking a 10 or 20 year horizon, I think that the prognosis for 20 years is extremely good in terms of fundamental acceptance and fundamentally addressing the shifts driven by population, resource use and waste and urbanisation and all these mega trends that we're seeing affecting our business. So we're going to get there. In my view, the question is what kind of life we're going to have after that, based on how quickly we worked it out in that 20-year period. Now, we're still fairly optimistic about the 10-year horizon as well. We think that we will have clearer guidance from our political leaders and agreement on what the economic development parameters are going to be. Ultimately, it'll happen anyway. The question is whether we can get there before it's the cost associated with adaptation later on to some of these challenges is greater than we would choose. So we're optimistic, but we know there's much hard work to do.
Great. Okay. Thanks very much.
My pleasure.